Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently up 0.85% to 42,253. Ethereum up 0.08% to 2952. A really quick question for you. When you look at this particular heat map, do you look for things that have come up really nicely and think to yourself, wow, I should get into that? Or do you look for things that maybe have tanked and try to go into those? Or do you look for the best technical structure? Let me know in the comments. From my 30 plus years inside financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. Thank you very much for being part of our globally extended family. I appreciate you being here. If you're going through a life pullback at the moment, please know our community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there is always hope. As a community, we focus on maintaining a positive excellence life trend. That's all about integrity, decency, kindness, having inner and outer peace. As crypto technical analysts, we focus on money. That's our stock in trade. But without the components of real wealth, all the money in the world will just leave you empty. I'm going to show you some things today which will be quite eye-opening, especially if it's the first time you've seen it. You can become very well off with crypto trading, but the thing is, who will you become when you become very wealthy? Who is that person? Let's go through our process and actually see what happened inside the main markets. We saw in the last trading session of the US the fear coming out of the market. This is absolutely sensational. This is what we're after. We saw economic confidence returning, the Nasdaq 100 starting to move up, and this inverse relationship between fear and confidence always exists, and it exists inside the crypto market as well. We saw bond prices coming down, bond yields going up, gold futures sold off to a level of support, rallied to a level of resistance, and then sold back, and they're coming back to this support line at around 1912. And we saw the US dollar sell off a little bit. It's had a fair degree of resistance at this point. I always like to share with you how I see these particular charts. You'll notice this big run up. I was saying to people, this is oil. I was saying to people about a week before that particular top hit, I was saying, be careful. Oil has gone too far, too fast. It will in all likelihood come down. And I drew a particular thing here which showed what I believe would happen. I believed it would come back about 26%. It actually came down a little bit more, but I don't move these things. I just leave what I say there. What is actually happening now is it's hitting a level of technical support. I said you can be assured that oil will do a technical bounce. That is what is probable, and it actually did that. And that technical bounce is about 11%, or just a little bit over. People were expecting oil to just collapse. I said no, that is not what the charts are telling us. Your ability to read the charts will actually make you or break you as an investor. When you think about all investors become traders anytime they buy or sell, learning the techniques of how to actually interpret price action is incredibly important. Once you've done with that with crypto, you can actually interpret the stock market and anything else really easily, because crypto is the hardest market on the planet to trade, and it's actually the most profitable. I'm going to go through some things today with you that will be quite eye-opening. It's exactly the volatility inside the crypto market which makes it the most profitable market, but you must have the knowledge. Let's pretend you know absolutely nothing about chart analysis and what this actual pattern means, what it stands for, what the probability of going up or down is. And let's go a step further and say that you basically don't care about the stock market or anything like that. You're just into crypto. Both of those aspects will really cost you dearly, and I'll show you why. What I've actually done here is put the NASDAQ 100, and you can see that particular price movement, the gravity of the stock market, is definitely playing out on crypto at the moment. Sometimes they become dephased, but at the moment they're moving together, and that's what always happens after a significant sell-off. If, for example, the NASDAQ 100, that chart we looked at previously, this one here, this is why I go through this chart. If it was collapsing down, we would suggest that the gravity, the momentum would be to the negative side, but we've seen the NASDAQ rallying up. That's really positive for crypto, and you can see it with your own eyes here. This is all part of KS Zone analysis, and these are the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 and Zone 2 are the zones where people lose money. They're really not sure what they're doing. They're addicted to certainty. They must have guarantees. In crypto and in the financial markets, you know the only people that will give you guarantees? They're scammers. You can see the scammers just throughout social media. They always guarantee returns. Absolute rubbish. After being in the financial markets for more than 3 decades, I can tell you your profitability will depend on your psychology and your ability to move from certainty, which just terrorizes people, into probabilities, rules, and patience. There's a huge difference in retail thinking and smart money or institutional thinking. In fact, they couldn't be more opposite from each other. Just a word of warning, if you see anybody purporting to do technical analysis on Bitcoin or any exponential crypto in a non-log scale, that means like this, that person does not, absolutely does not understand technical analysis at all. And what actually happens, because they don't understand that we need to use constant percentage movements or a log scale, and this is really important, they'll create erroneous understandings or erroneous analysis of what is actually happening in the market, and then people rely on that, and then everything goes horribly wrong. Of course, just have your tripwires up in the first place. If people look at Bitcoin like this, please run. They don't know technical analysis. They may be really good in other areas, for sure. Everybody's got their strong points. But when it comes to technical analysis, if you see this, be very, very careful of what comes next out of their mouth. If you're new to the crypto industry, please turn your charts to log if you're actually analyzing anything over a substantial period of time. It's just a requirement. It's like literally rule 1. Crypto technical analysts who are professionals, they actually mark their charts up with a very specific methodology created specifically for crypto. When people apply normal stock market and forex trading rules into crypto, they basically blow their accounts up, and they don't know why. It's because crypto is exponential. It's the most volatile market on the planet. Crypto technical analysts have the skill of marking up their charts, and it's really important to do. When you understand how various lines of support and resistance play in, that can be an absolute game changer, and it's not easy to do. You really need training in it. A lot of people just draw lines all over the chart, and then their projections don't hold, and they don't know why. There's a very scientific reason for that. We must mark up charts in crypto in a very specific way, and it's about capturing exponential price action. What we actually see with the current price just hovering around this support line, we have a lot of resistance up around the $45,000 mark. It is more than likely that Bitcoin will seek to take out or to test this 45,000 level. But one thing that a lot of people don't understand when they get into financial markets, price is always moving in a wave. It's going up and down, up and down, up and down, up and down. Please keep that in mind. When prices come down, it doesn't mean that things are over. It means it's part of a wave. In episode 464 at 38 minutes and 23 seconds, I shared this particular thing from my trades. Basically, over the past week or so, I put about $57,000 into a variety of different trades, and on average, just for this selection, I had about a 10% return, which was about $6,000. And I just did this, shared this with the community because I wanted to show something really important that a lot of Zone 1 and Zone 2 people have never ever heard of. In fact, probably less than 0.5% of people actually know this. When we talk about understanding percentages inside Zone 3, we're starting to abide by the rules of making money. Zone 4 is the rules of keeping money. They're different rule sets. Losing money, making money, keeping money, they're all different rules. One way to make money is to understand percentages. And when I say understand a percentage, I'll go into that in more depth. For example, when people enter the market inside Zone 1 and Zone 2, the panic and the blame zone, they want 10x, 20x, 50x. They want to hold on for dear life and they don't want to trade. What is a 10x? A 10x is where 10 goes to 100. That's a 10x. A lot of people talk about hodling. And this is how retail investors and traders hodl. They hodl, 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 hodl. They kind of never sell. So if we look at that, the Zone 1, Zone 2 focus has flaws. This is a retail focus, and a lot of people, a lot of retail influencers have absolutely no trading expertise. Professionals can see it very, very easily if somebody knows how to trade or not. And I've looked at the biggest influencers across crypto. The vast majority do not know how to trade. So you'll see a lot of Zone 1 and Zone 2 memes, and these are really quite funny. Crypto trading is stressful, says Jennifer Anderson. It's so funny. Who said crypto was stressful? I'm 21 and I feel great. What those memes are about is basically not making three-way decisions, not having patience, not having rules, not making volatility your best friend, not having a 10-5-10 fund, not looking at the reality of price and collecting probabilities and getting stuck inside certainty. It's all about the fact that when people make money, they actually buy on red. They do not buy on green. Just getting into that a little bit further, in Zone 1, people actually not sure what to get, so they'll just get anything. And when they do, they're looking for the 10x, 20x, 50x, 1000x, millionx, billionx, whatever x it is, and they go all in and more, and then they see the price tank, and they say, oh, I got it wrong, that person, oh, I'm so angry at that influencer, I blame them, Zone 2. And then what happens? They sell. So because price is always moving in a wave, going up and down, it's really easy for Zone 1 and Zone 2 people to mistime the market, to actually buy when it's going up and to sell when it's going down, to buy when it's going up and to sell when it's going down. You can see that is a really, really bad thing to do. But you require a different psychology to get into Zone 3 and Zone 4. You'll see an example today where Zone 3 is applied to trading. It's all about scaling in and scaling out. One thing when it comes to percentages, and this is so important to understand, if, for example, you put $1,000 into the market, but it doesn't matter what it is, it could be $100, it could be $10, whatever it is, you can actually scale, but that's another talk for another time. Concept is, on March the 6th, say that you put $1,000 in to a specific crypto. On March the 12th, say you came out of that crypto and you came out with $1,100. You made a 10% return. What is this meaning? At the end of the year, what would you actually get if you just could make cumulatively 10%? The Zone 1 and Zone 2 people would say, ha 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 ha, Far out, you got it wrong. Man, you got to go for 10x, 20x, 50x, 10%, you loser. Actually, what happens when you apply the rules of making money, you understand how percentages work. You've already bought on the red. You've actually held a loss. You're buying at a loss and going down and accumulating a loss. That is the exact opposite of anything anyone would do inside Zone 1 and Zone 2. They are allergic to losses. They certainly don't want them. But here is the key. When you actually get 10% return in a week over the year, that's an annualized return on investment of 11,639%. That is crazy stuff. When we're talking about a 10x, this is 117.4x across 12 months, assuming that you just made an average of 10% per week. Of course, in some weeks you're going to make more and some weeks you could make less, but the concept is without the rules and the knowledge you can't make these returns. Without patience you can't make these returns. Without a focus on who you become when you are successful, that is really, really important, and you need to actually buy on red. But what does it do? $1,000 turns into $117,390. We're not actually, and I'm not actually saying that you should go after 11,639% return. But what I'm trying to impress upon you is just getting 10% a week is really, really good. And you may not get 117.4x, certainly maybe not, but you may end up doing far, far better than those people who do this. Hodl, 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 hodl. You get the idea. When I shared this in episode 464 at around the 38-23 second mark, it was all about absolutely sharing with people that a 10% return can be really, really good. And that created some fantastic discussions inside the community. Art said, after learning tight trading in the masterclass, I'm having a ton of fun with it, and it really is a very cool methodology. Art's using 5% as his minimum, which is really good, and Art said it's surprising how quickly the account scales. Thank you, Art, for sharing Tales from the Man Cave, one of the most important videos you've ever done. Thank you, my friend. When I first realized that it's not about getting 10x on each trade is when I got profitable. Well done, Tales. It's absolutely correct. And Andrew said, I found the annualized accumulated return hard to believe from just $1,000. So I did it on the calculator week by week. And it's true. Andrew says, this is the biggest game changer for me since discovering limit orders. Wow, just wow. Good on you, Andrew. It's one of those hidden rules, and this is really interesting. A beloved community member, I was going to call him a beloved family member, but our community is family, so it's both, reached out to me on Twitter and said, hey Ken, check this out. I've been doing that trading. That's a person that's involved with the masterclass, and I wanted to share this with you. This is Gala. You can see Gala USDT here. These are the buy levels, the 4 buy levels, and this is how we mark up our charts. We buy on red. For example, the price was up here, but this particular community member knew it was coming into resistance, so placed the buy orders substantially lower. There's a lot of knowledge that you need to actually understand how to do this properly. It's not like throwing a dart at a dartboard and just hoping it hits the bullseye. There's a lot of science behind this. These $4,000 levels were hit, and it took actually 2 days for the sell, we sell on green, to be hit up here. Now, what was the outcome? The outcome was 16.13%, or $645. Very, very good. In 2 days, not 1 week. So what would the return be? Started with $4,000, ended up with $46.45. So let's just pop those into the calculator. From this date, March the 17th, to March the 19th, this date, That was a 16.13% return, which aligns exactly. 645, which aligns exactly. The annualized return is quite a few X's, and this is unrealistic. I'm not suggesting that anybody try to create a return like this. It's just the understanding that a 10% return done quickly is quite good, and that is the focus. Many students share their trades with me, and I love seeing them. It's just beautiful. I'm so proud of everyone that's done the masterclass and they're applying the knowledge. And this knowledge is fun. It's not like you go to university, you learn something, and then 5 or whatever years later, you'll actually apply it. You learn it and you can apply it. It's just awesome. The concept and the thing that I want to leave you here with is the idea that very substantial annualized returns are possible. That doesn't mean that you should go for them. Don't place yourself under stress. Just let the natural movements of the market dictate what you can do. Move with the market. I'd like to thank TSP. This is just a comment from that particular one where I shared my trades. TSP said, I learned so much so far in my masterclass, came back to the foundation, still drawing many charts, analyzing them down to small time frames. Wow, oh my God, powerful knowledge. And this is really important too. As Ken says, can you make money at this period of time? You can make money anytime in the market on many time frames if your foundation charting is rock solid. It comes down to your charting. It's really vital to get those lines correct. And the other thing, which was a really good concept, my bank gives me less than 1%, and that's not 1% a week. That is 1% per annum, if you're lucky. And TSP just absolutely nailed it. Retail crypto YouTubers shoot for the moon but realize later they don't have a ticket on the rocket, because that's why they think from a retail mindset. They don't even know where the rocket is. They don't know if it's going up or down. Actually, you see it all the time on YouTube and especially on Twitter. People talking about, oh, it's going to the moon, because it's green. And then when it's going red, oh, it's going to 10,000, Bitcoin going to 10,000, Bitcoin going to 0. Oh, the people that follow these retail thinkers, they must get a headache. And TSP said, once I complete the masterclass, I will be pulling some triggers with real confidence one day soon. This is a very significant thing that TSP has actually said. I developed the masterclass, the CryptoTradingKS Masterclass, because I wanted to share my knowledge, gained over decades and decades. The foundation section, you can see there's quite a lot. This is just the fundamentals of drawing up your lines on charts. The trend section, you can see there's a lot of lessons. The timing section, the real wealth section, this is getting your mind correct, and it's really, really important. And for many people, this is their favorite section of the masterclass, and they didn't realize that when they went into the masterclass that it would be so significant. And then it's the trigger section, the buying and selling. What you can see here are real examples, real charts. I share everything about what I'm actually doing. And then there's also a living masterclass where I continuously update people. So when TSP says, once I complete the masterclass, that is absolute dedication, and that's what it's all about. You can complete the masterclass in as little as 4 weeks, but most people do it in a month or so. We had some really good comments in that section, and Buildy, one of our beloved family members, he said there are a lot of different styles of trading, and when you get the toolkit, just fit your style of trading that you feel comfortable with. The newer style that Buildy's using is tight trading, and he's looking about 10% each time on just one coin using the CTKS method. That's the methodology specifically invented to actually track crypto's exponential price action. recycling my funds over a period of a week or two, and it doesn't matter if it's over a week. That is unimportant. We just have to work inside the market and learning the personality of that coin. That's what we're all about. We draw a lot of lines on charts because we're actually trying to determine where the personality of this particular crypto will go. But tight trading is just one style of trading. What Buildy says, that is just one style of trading, and you could lose a heap using that style, like any style, if you don't have the tools and the knowledge. This is really, really important to understand. You need the knowledge. And what I do inside the masterclass is I share everything. I want you to be successful. If you pop across to www.cryptotechnicalanalysis.org and go to the testimonials section, there's a video up here where I explain why I'm just sharing all of my knowledge. It's for a very specific reason, and I think it's important to understand why people do what they do. I want you to be successful, and I want to make sure that my knowledge is spread to as many people as possible. And you'll see in this particular testimonial section just some feedback of many, many people who have done or are doing the masterclass. Getting back to what Buildy said, I also use the CTKS method to gain better entries and set sells on things I hold a bit longer for slightly larger returns but less frequent trades, say over 2 to 4 weeks, and some other trades can be held for weeks and months. There's so many different ways to actually trade. Some mirror investing, but we always know that all investors become traders anytime they buy or sell, but only 5% of investors actually know how to trade. If you don't know how to trade when you are investing, you can get caught in that cycle of buying green, selling red, buying green, selling red, until your account is very, very badly hit. Buildy says the percentage gains you make will depend on how well you apply the techniques, and one of those techniques, a critical one, is your psychology. That's rule 570. Psychology sets profitability. A lot of people inside zone 1 and zone 2 say, guarantee me a return. Nobody can do that. If somebody says, I guarantee you a return of X, run. They can't. It's impossible to do. What you must have is the knowledge. And it's all about being flexible. It's not about being fixed. Sometimes you will not get 10% in a week. You won't. And sometimes you'll get 30% in a week. You will. And it really doesn't matter, because it's all about scale. It's all about starting small, getting an understanding of what you're doing, and then building your knowledge. And Buildy says something very, very important. If you're looking for an indicator that guarantees X return over X period, or if you just do what the indicator says, that's not what the masterclass is about. We have a very healthy disrespect for indicators. There are some indicators that are incredibly good, absolutely, but most of them are sheer rubbish. Buildy says, can teachers use the tools and also examples of how to apply them to different styles? It's all about giving you the skills to analyze and take action based on your analysis in any circumstance, and most importantly, how to build real-life wealth, of which money is one of many components. Just beautiful, Buildy. So very, very true. This really was quite fortuitous that this beloved community member reached out and said, Ken, check this out. And I thought, wow, that's great. I'll pop it in. You okay with that? And he said, yeah, go for it. The concept here, within a couple of days, turning 16%, bears out very, very well when compared to bank interest of 1% over 52 weeks. I'd also like to thank Peter. 10 to 15% tight trades are my current trading ethos. It works and accumulates faster than anyone would imagine. And Stephen said, thanks for sharing the trades and making another reminder about compounding your returns. This is a key psychological shift from being a hands-off long-term investor and being a trader, which I think a lot of us need to address. Something I have always struggled with, but getting better at, is exiting the trades rather than holding on indefinitely. It's really hard for people to know when to exit, especially as things go parabolic. But what we do every single day here is keep warnings, keep tripwires out towards the market and see what is happening. I know this is in the stock market, but when oil was making this parabolic move, I said be aware of this particular drawdown, and that was long before it collapsed. 25% drawdown. I was saying the same thing in terms of gold, but I expect this area to be a buy area. And we do, of course, this in crypto. In fact, I have 8 charts here that I would like to share with you. I think these 8 are really cool and good to look at. A lot of people have reached out to me and said, Ken, ADA is taking off. You knew it would take off. And yeah, it has. Because when we read the charts through the understanding of the masterclass knowledge, we can see things that other people would never see. And inside the masterclass, every single episode, every single video, I share something that I've never shared in public before. Looking at Solana here, we can see Solana is starting to turn around. AVAX starting to rally up. Luna starting to get a bit overheated, so just be careful, but this could very well be a good trade. Just be a bit careful of that one. Cardano just starting its run. Rune doing strongly. Masterclass students, be aware that an SA is forming there. Gala starting to actually scoop itself up. Nice. Could be a very good trade. And one thing you should always remember, for example, if you sell out at a particular point, just lay your trades back in for the retracement and then just go again. That's what we do. And focusing on just 1 or 2 cryptos is really the key to success. If you spread yourself too thinly, it's just too much to keep an eye on. We can see SAN coming up, and Matic could be really interesting. I just flagged this one for you. As crypto technical analysts, we understand that we can make returns no matter what. Bull market, bear market, it absolutely, utterly makes no difference to us whatsoever. And they can come fairly quickly too. The returns, that is. If you're interested in the CryptoTradingKS Masterclass, please hop across to www.cryptotechnicalanalysis.org, and I've left a link in the description of this video. Just go across to the ambassadors page. Of course, check out the masterclass and the testimonials and why I actually put this class together, this masterclass. And then when you would like to buy, just go across to the ambassadors tab and you can just contact these ambassadors directly on Twitter. They will give you a special code or link where you can actually get 80% off. And new ambassadors are actually coming. I've reached out to a few. I'm just waiting on a response. So if you could just check your email. If you're finished off the masterclass, please just have a look through for anything from me. In the comments section on YouTube, please let me know, what do you think the price of Bitcoin will actually do? Do you think it's coming down to meet Percy, the magnetized price sheep, at this lower support level around the 41,000 mark? You think it's going higher up towards the rocket, or do you think it's coming down lower towards Percy's beloved friend, FUD? Fear, uncertainty, and doubt. Basically, do you feel bullish, bearish, or just neutral? I'd love to hear your thoughts. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. Thank you very much to our moderators for keeping our community safe from scammers. And to the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I have left helpful links in the description of this video, such as the link to the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.